Hello, everyone. Thank you for joining us for how to avoid critical accounting pitfalls in your law firm with our sponsor, CosmoLex, as part of the LTRC Industry Insight Series held every Wednesday. Our speaker today is Erica Birstler. Erica Birstler is the Vice President of Product Communications at CosmoLex Legal, developers of the only fully integrated case management, billing, and complete accounting system specifically designed for law offices. Erica's degree is in business administration, and she has nearly a decade of experience in the legal software industry, catering to the specialized technology needs of small to mid-sized law firms. Erica is passionate about helping legal professionals improve the way their law firms run, and she has given numerous presentations across North America on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance. Thank you all for joining us. We'll now begin the webinar.
Thank you so much. Welcome, everyone. I appreciate you joining this session today. Today, we'll be focusing a little bit on accounting, and I'll be honest, now is really the time to, though this is something we should think throughout the entire year, I think by nature, end of year is when we really start thinking about, okay, we need to get this stuff together and maybe make improvements wherever we can. So in our session today, what we'll be covering is first, just a little bit of foundational backstory as to what legal accounting is and how it may be different. We can have all different types of people on the call today, people who do bookkeeping, who don't, who have no idea what it's about. So I do want to set that bit of a foundation for everyone on the call. And then we'll dive into what the common accounting pitfalls law firms face. So there are many different steps in the process of doing accounting for any business, but there are certain areas that specifically law firms can get hung up on and can really impact maybe your accuracy or your efficiency, and we'll cover all those different areas today. And then lastly is how choosing the right technology can be a game changer. So the type of tools that you use to manage your financials in general can either help or hinder how accurate and also efficient your overall accounting process is. So we will wrap up with that at the end. So let's first talk about what legal accounting is. So accounting in general, usually when most people, even a layperson thinks about accounting, they think of the business accounting aspect, tracking your expenses as a business, reconciling your bank accounts, even preparing your financials and your reporting for end of year tax time. That's the same for any business. Makes no difference. It has to be done. And that is usually a combination of bookkeeping, which is the day-to-day, like the expense entry part of it, and sometimes the bank reconciliation as well. That's very much a bookkeeping activity. And then you get more into the accounting activity, which might be a quarterly or end of year preparation come tax time. But when it comes to law firms, there are two other areas that I like to bring to light, one of which is matter accounting. So you, of course, have your clients and they have their individual matters. There's actually accounting that happens within those. They have their own little ledgers and little bubble of financials that takes place. And there are certain regulations associated with those. So you might have matter costs, which are not business expenses per se, but they're items that could be directly or indirectly related to your client files that typically need to be reimbursed. You also have your trust ledgers, the different trust activity, depending on, every jurisdiction, trust compliance is important, but what the requirements are may differ based on where you're located. But having those ledgers intact and handled appropriately, and then payment allocations. When you have an invoice and you receive a payment, it's not one lump sum of here's income. There are different factors or different line items of possibly in your general ledger itself that may account for that income. And each of these we're going to break down into some of the items we talk about today. And the last piece is compliance. I think every law firm knows that at the end of the day, you want to be compliant because that is what the firm is on the line for that. And that loops in a lot of the trust accounting, any legal specific requirements. Sometimes you might even have practice area specific requirements as to how you handle financials for particular files. And so this whole picture is what we look at as legal accounting. So it's everything that a business needs to think about, like every business needs to think about, plus what is it specific when you're handling especially client funds or compliance. So keeping all of this in mind, these different activities, I do want to, Sasha, if you can launch the poll, we want to ask how you're currently managing your firm's accounting. Are you using a generic accounting software like many businesses, for instance, like a QuickBooks? Are you using something that's built into your practice management tool that is legal specific? Are you using spreadsheets, maybe just pen and paper or written ledgers? Or maybe you don't know. But if you do know, go ahead and let us know. I'd be curious to hear responses from this group. Okay, so we have over half of you are using a generic accounting software like QuickBooks or QuickBooks Online. 8% are using PC Law. We have some of you using Excel, pen and paper, and I'm very happy to hear that none of you are clueless about this question. So that's good. That means you're at least aware. You might not be doing the work, but you're aware of how your firm is handling it. So this is very useful information to kind of go along into our topic today, because some of the challenges do have to do with the type of technology that you are using. So thank you everyone to respond, who responded to that. And now let's dive in. So now we're going to go into these different pitfalls. Now this comes about, I'll tell you, I've been working with law firms for over a decade now. So conversations with legal bookkeepers, generic bookkeepers, law firms, legal staff, the things that tend to kind of be a thorn in their side that they realize are either causing compliance concerns or maybe are mistakes that they keep catching, but they don't know how to get ahead of it, or they got audited and it was a nightmare. You know, all of these different situations come up. Some of you may have experienced a lot of these along the way. And the idea is to really prevent all of these challenges going forward. So the first one might seem very obvious, but I can't stress it enough. One of the biggest challenges in law firms is just looking at it as any other business. And we talked about in the first slide about the differences that law firms need to keep in mind. And you have different regulations in place when, especially when you're handling client funds, but even how you record your income and which party receives what portion of that income. Like there are certain things that are unique to a law firm that you need to be aware of. So not every employee can wear that hat. I think when you're, especially if you're a very small firm or even a solo, there is that growing pain of everybody just needs to chip in and get the job done. Totally get that. But whoever that person is still needs to understand what the requirements are and what the compliance is around that. There's never an excuse for that, because that is the responsibility of the firm, even if it's just one person. Even experienced bookkeepers may not know law firm compliance. I hear many law firms that say, I have this person, they've been a bookkeeper or an accountant for 40 years. They know what they're doing. They've worked with X amount of businesses, but I'm their first law firm. Now that's okay. It's okay to have somebody where you're their first law firm, but are they putting in the effort to understand the differences between a law firm and any other business? You want to make sure that that's actually a priority and it's not just assumed that functions like any other business. You also can't rely too heavily on the generic accounting tools. So I know about half of you are using generic tools like QuickBooks. So you can use those tools to do your accounting, absolutely. But you need to also remember that it's not going to prevent you from doing things that are not allowed from a compliance perspective, because it's not built that way. I think too many times I've heard personal stories of maybe I did a seminar somewhere and I've had a few people come up to me and say, you know what, I got in so much trouble because my ledgers were all negative for my clients and I didn't know. And I'd say, well, how did that happen? Like, how did you get to that point? And the response was simply, QuickBooks let me do it. You know, it let me do it. So I didn't know any better. I just saved the transaction and went about my way. And of course, that means that the law firm's not taking the proper responsibility. So you can use the tools, but you have to be mindful of those actions and what the consequences are to those actions, because being audited in that situation might not end out so well. And I've already said this, and you'll hear it quite a bit, because I always want to make sure it's clear. No matter what tool you use, no matter what resource you use, no matter if you're outsourcing help in-house, the accountability falls on the firm. End of story. So that does not mean you have to do the work yourself, though. I'm a big fan of outsourcing for expertise, which we're going to talk about. but you have to do it the right way, which means having that awareness and having the accountability for that resource. So how to do a little bit better when it comes to knowledge. Hire experts from anywhere. Especially now, think about with these Zoom meetings and all the remote work that many of us do, you don't have to rely specifically on your town or your area to find the expert help that you want. If you find it there, great. But if you don't, that doesn't mean you can't go outside of that circle. You no longer have to have people that physically come into your office every 2 weeks to do that type of work. So definitely broaden your circle a little bit. Seek resources with experience in law firm compliance. If they've been through an audit, even better, because they know what to expect. They know the challenges that they faced. And if you have somebody on staff right now, whether in-house or outsourced, ask these questions if you haven't already. Say, have you ever been through an audit? How did that go? Did you have challenges? What are we doing to avoid those challenges here at this firm? And just know the limits of the tools that you're utilizing. So like I said, I gave that example of QuickBooks. If you know that QuickBooks is not going to warn you if you overdraft, well, then you need to make sure to look at that balance or whoever's doing your transactions before taking that money out. That should be part of the process. So it can be done, just needs to be done thoughtfully. Client funds. So I probably don't have to tell you all how important it is to be compliant with the trust account, but this is one of the areas where it is unique to law practices. Anybody who's ever done accounting for outside businesses or other businesses and not law firms don't understand the first thing about trust accounting. So it just takes a little bit of education, but it's important to know that in your state, because every state's a little bit different, are your retainers in, do they have to go into trust account? Does every invoice payment have to go into the trust account? It changes by state, so make sure you're aware of your local requirements. The compliance is on the bank account level, like dealing with reconciliation and reporting, for instance, versus the matter level. Like on the matter, you can't have commingling of those funds, you can't have those overdrafts that I talked about, and having that awareness and sticking to it. And checks and balances are really important. You want to know that the rules and regulations that you need to follow, even if somebody else is doing that work, okay, who's verifying that that work is being done just on a high level, whether it's the timeliness, whether it is, like, we'll talk about reconciling in a little bit, is that being done regularly? What's happening if they're finding mistakes from a top level, just to touch base and know that things are going the way they should. So some tips to doing better. I already mentioned this, but know the requirements of your local jurisdiction. Don't assume that whoever does your bookkeeping or accounting is doing the right thing, because they are not responsible for this. I'll say that again. They're not responsible. You're responsible for hiring the right resources and making sure they're doing the work the way that is compliant for your area. So definitely know what those are, and ensure your resources are aware of them as well. Function as if you'll be audited tomorrow. One of my biggest tips. States are different. Some states have a random audit. Some states, it's just if you get flagged by a bank, they'll audit you. Some it's once a year. You know, it kind of depends where you are. But even if you don't have a strict random audit policy, you should function as if you do, because all it takes is one client complaint or one bank error for that red flag to go up and for you to be audited. You don't want to be scrambling. I know of many a firm that was not prepared for an audit, and they literally pretty much had to shut down their firm for a few weeks in order to get the paperwork and the information needed to the auditor. Not only that, but if, let's say you haven't reconciled for 6 months and you're like, oh, well, now I need to reconcile because the auditor's here. You're going to find things in those 6 months, likely mistakes that have happened, whether it's by the bank or by the staff, and fixing those and ending up with the proper records is going to be very difficult, if not impossible, depending on what the situation is. So definitely suggest that. It's like an insurance policy. Just assume that it's going to happen tomorrow and you'll be in tip-top shape when it does. And use tools that enforce compliance. So anything with trust accounting built in. There are legal practice management tools that include trust accounting. Most, if not all of them, include safeguards that will just ensure that you're not doing like the overdrafting, that you are recording next to a matter, that you do have the needed reporting. And that's part of the requirements piece, is if you were to get audited, what reports do you need to provide? Can you provide them today with whatever tool that you're using? It's almost like a drill. Make sure that you can provide that stuff today. All right, a little bit out of the compliance realm. This is more dealing with, believe it or not, your matters, but also your bottom line. Unrecovered costs is one of the biggest ways that law firms lose money, and it's completely preventable. So these are costs that are paid out of pocket that you're paying upfront out of your business account to cover something related to a case. And the intention is for it to be reimbursed by the client. Whether or not that happens is the question. And it all comes down to, what that workflow is between you paying the courthouse by credit card, let's say, to that getting on a bill. What does that workflow look like, and how do we ensure that those items don't get dropped? So how many items are not reimbursed? Is it a collections issue, meaning it's billed and not being paid for, or is it a workflow issue, meaning it never even gets on the invoice? And very often when I talk with groups, especially when I'm in person, I'll ask, by a raise of hands, how many of you know you have costs that are not being reimbursed? Almost everyone raises their hand. Do you know how much? Nobody knows. It's this like unaccounted for number. It could be tens, hundreds, or thousands of dollars. And if you can have control over that, you want to, you don't want to leave that up to, oh, you know what, there may be thousands of dollars being lost, but that's okay. No, let's go ahead and recover that the best way we can. So some things to keep in mind. Track a ledger for your credit cards. I think, especially if you have, even if it's just one attorney, but if you have multiple in the firm, they may all have their own business credit card. They have all types of expenses that happen on that. It could be firm related, like maybe they bought some paper for the office, but it could also be those filing fee, and a lot of online charges happen through credit card. But are you keeping a really good track of what those expenses are when they happen, who they're related to? Keep a ledger, which is basically a listing for each card, what took place. You'll be surprised what gets missed. A lot of items on credit cards because we use it so absentmindedly. We just give a credit card. Most of us are terrible at keeping receipts. So having that tracking is important. Seek for mobile access, whether it's a cloud application, a mobile app, any way to enter in the moment. That's the key. And usually these expenses are happening when you're out of the office. So a way to enter those items right in that moment. It will take a little bit of building new habits, but I'll tell you, it's really important for both expense and time to enter that right in the moment so it won't get forgotten. And it's also a lot more accurate if it's done right away. You want to streamline your accounting and billing workflow. So those expenses might be tracked on like a bank account level in my accounting system, whatever that may be, but how does it make it to that invoice? Some of you might be using a separate system for your billing, and somebody needs to remember to, okay, log into that separate software and enter it on an invoice. Some of you might be using a system where everything's all in one. How are you taking those costs that are entered on the bank account level and marking it to that file to ensure it goes on an invoice? And is that happening successfully? Because we have many different people in these workflows. You may have various staff that are entering these expenses. Is everybody following the same process? And it's important to cover your costs first. So this gets into that partial payment aspect. If you have bills that are out there to your clients, they pay you partially, you should always cover your costs first, because that's something that you've paid on their behalf, basically. So ensure your allocations are happening that way as well. Which takes us to the next item, which flows very well with this. So we talked about, retainers, we talked about tracking items. Now we're talking about invoicing. So it goes kind of along with the billing, as you could tell. A paid invoice, whether partially or in full, any invoice, shouldn't even say paid, but any invoice, it's just not all one thing. There are different components. You have costs that might be indirect or direct. You have fee, you might have late charges, you might have other line items, discounts. There's all these different things that could be on an invoice, finance charge, and it's not just one lump sum. When you talk to your bookkeeper or your accountant, likely they have on the general ledger, which is your listing of your income accounts and expense accounts, along with others, they're likely a little bit more specific, a little bit more granular, because you want to know of that $1,000 invoice, what actually did that go towards? How are those partial payments handled? So if you got a $1,000 invoice and somebody paid half of that, 500, currently today in the system that you're using, how is that being allocated? I could tell you in generic tools, it is proportional, covers a little bit of the cost, covers a little bit of the fee, but it's dispersed amongst everything. What that means then is you are, in that situation, earning fee before your costs are covered, which means if you have distributions in your firm, if you're actually giving fee distributions based on the fee collected, you may actually distribute out to parties before your costs are covered. So you could see how that could result in an issue. Now, if everything's paid in full, there's no problem here, but how often do you as a service business have partial payments, balances, and end up waiving off the rest? You don't want to be waiving off costs that you paid out of pocket. And do your billing and accounting records match? If you do have that separate situation where you have, let's say, we'll use a credit card. Let's say with invoices. So if you have an invoice in your billing system, that was that $1,000 that I mentioned, and you have a few partial payments, do they match up with not just the money that comes in, but the items on that bill and how it should be divided on your general ledger? Somebody should be cross-referencing that. So things to do, or tips I should say, to doing a little bit better: have awareness of the invoice components. What is on a bill? Do you do mostly flat fee billing? Do you do hourly billing? Do you mainly have these costs out of pocket? Do you do finance charge? Like, every firm's different as to what their bills typically contain. Know what's on those bills and know how that should be treated from an accounting perspective. Partial payment should apply to fees last. So verify what your current setup does. I mentioned what the default behavior is in QuickBooks. I'm not 100% sure if there's a way to control that in other versions, so double check. Also, QuickBooks Online is a little bit different. So again, double check, ask whoever does your bookkeeping, how do my payments get allocated if it's paid partially? And you want to reconcile, if they're separate, your billing and accounting records regularly to make sure that nothing was missed. That's the key to it, because with matter costs, it goes from accounting to billing. With invoices, it goes from billing to accounting. There's a lot of interaction between those two, and you want to make sure that they match. Same thing with retainers. Retainers also are kept in both systems. So you want to ensure those numbers are matching, but somebody needs to verify that outside of the bookkeeper themselves. Could be somebody on that staff, but it should be a separate set of eyes. All right, so now we receive some money. We're building our bank account. We're getting some money in, which is great. Then it comes down to reconciliation. So reconciliation is a basic accounting function. Every business needs to do this. And the sole purpose is to finding and fixing mistakes. That's the purpose. Now, reconciliation should be done really for all of your accounts. That's credit, business, and trust, because if there's a mistake, it's best to spot it and fix it, but it is required for trust accounts. It is required as monthly for trust accounts. You want to make sure that you're not doing just one giant 6-month statement and reconciling there, because that likely is not going to be acceptable if an audit is to happen. So monthly statements are required, best practice across the board. So a few things to keep in mind. Now, usually this is, like I said, a bookkeeper activity. Anybody in your firm might be helping with this, but it does require a keen set of eyes to compare between what happened on my bank statement, what happened in my books, does it match? Yes or no? If not, what's the issue? Is it just, it's the wrong date? Is it a wrong amount? Is there a duplicate item? Because sometimes the bank might do a duplicate deposit or withdrawal, and the only way you catch it is through a reconciliation. So whoever does it, require that they not only complete reconciliation monthly. So let's say the first week of the month, you should require that last month's be closed and reconciled, and that there's a report to go along with that to show you what the balances are, does it match, and is anything uncleared? Because uncleared is fine, but if something's not cleared for several months, there might be a problem there. So that's the type of awareness that I'm talking about. You don't have to physically do the work, but they should be providing that paperwork to you, those reports, each and every month, so that you know that's getting done. If you're a highly transactional firm, I know a lot of firms that do things like real estate, Or if your credit cards are highly transactional as well, a lot of the time they may leverage bank feeds or statement imports. So bank feeds is when you connect to the bank and it live imports for you to verify and confirm items. Statement imports is at the end of the month. You could just take an online statement, import it at the time of reconciling, and do it kind of all in one step. Either way, it helps with the volume. It makes it a little bit easier because there's some usually built-in intelligence of saying these items match, confirm, but it's not doing the work for you. It still requires confirmation and reconciling on the firm's behalf because you can have two transactions with the same amounts and dates. It happens. So you don't want to leave it to technology to do the work for you, but it can help and assist so that that process doesn't take so long. Also with bank feeds, you can reconcile daily. I personally at CosmoLex, we have law firms that do this all the time. If they have a lot of transactions that come in, every day they'll look at what comes in the feed. Every day they'll match. So that way by the end of the month, pretty much everything's taken care of. They just need to see if there's a discrepancy. So it spreads it across the entire month as opposed to everybody's in a rush and kind of trying to get everything done in a day at the end of the month. This one has been around for a long time, but has definitely in the last year or so come to the top of the pile, is collaborating remotely. Accounting and bookkeeping is something that's often outsourced for the many, many years. So it's not uncommon to have a bookkeeper that is not part of your law firm payroll. For years, and you may even still be doing this, it will require the bookkeeper to come in every 2 weeks, or might require somehow sharing a database file for them to look at. And that's just not needed anymore. You don't have to have it. So I do think that looking towards outsourcing, if you're not already, something to keep in mind. Remoting into your server or sharing a file, it can be cumbersome. But also that file gets outdated the second you send it. So you need to be careful as to what version people are working on, what data are they looking at, all of those components. And if they're coming into office every 2 weeks, that's not always realistic, but also not necessary. Like I said, you can source resources or staff from anywhere now. They don't have to be within driving distance of the office. And it makes it so much easier to not have to worry about coordinating that check-in. Some tips: cloud. I don't think I have to teach any of you about cloud anymore. I think the last year or two has really it's self-explanatory. You know, being able to access wherever you are, not just for outsourced resources, but for you and your staff to not have to be at the office if you need to check your books or to check reporting, to be able to see it on the go. It's no longer nice to have, it is a need to have. So if you don't already have it, definitely look into converting the core functionality and record keeping in your firm to some sort of cloud access. Seek consolidation of your financials. So we talked a lot about costs, invoices, payments, retainers. There's also just the business expenses. Anything having to do with a dollar, you want to make it as unified of a view as possible so that whoever is doing your bookkeeping and accounting really get that full picture. They're not having to check 3 different tools. They're not having to do too many of the checks and balances. Everything just kind of lines up. So try to consolidate as best as possible. And I do hear from a lot of firms that the reason why they keep, let's say, their accounting separate from everything else is because that's more secure. And it's just not true. Do certain people require certain access and others don't? Absolutely. But that's not how that's done. Having them in completely separate locations or separate softwares is not the solution. Try to consolidate as much as possible and leverage permissions and restrictions. That's the way to do it. Only permit certain people to access certain data, but those that need to see the full picture could see it easily, and it's going to be a lot more accurate. And the last point as we wrap up is business analysis. So this is just how to run a better business. You know, have a pulse on how your business and individuals are performing, what's going well, what's not, what could be done differently. And all of that should be data-based, I'd say analysis, but just like the intake, the collection of that information and making decisions based off of that. And I think a lot of the time all businesses don't prioritize this. So some things to keep in mind if you're not already: evaluate your business plans, what's most important to you, develop a list of unanswered business questions like which of the attorneys in your firm is most profitable, which area of law is most profitable, which area has way too high of expenses. All of those things, can you answer them, and which questions and answers are important to you with where your business is going. Seek tools that consolidate that information so you can analyze it more effectively and easily. And you want to measure against benchmarks and your goals. What are the goals for the business over the next 6 months, over the next year, the next 5 years? And how are you doing on the path to those goals? All right. And lastly, this kind of aligns with our survey at the beginning of today's session, but when you're talking about compliance, a few things that are important are having electronic record of your transactions, having built-in reconciliation, the ability to close your books so people can't just go in and change whatever they want, enforcement of matter-centric records, especially for your client funds, safeguards to avoid common trust mistakes, and the reporting that you need. And with the items that we talked about today, you can kind of see how each of these line up. Written ledgers, spreadsheets, the more flexible a tool is, the less restrictive it is. I think people like flexibility, but flexibility is the enemy of compliance. So just keep that in mind when you're using different types of tools as to what is doable and not doable with those resources. All right, so this kind of just summarizes what we just talked about in that last chart. I do want to say that there are tools out there that have legal specific accounting and billing. I mentioned that there are practice management options that do have your legal specific accounting built in. CosmoLex is one of those. So of course, if you want to learn a little bit more, we have a cloud-based, fully integrated system that has your billing, accounting, and day-to-day practice management. So if you want to learn more, absolutely feel free to reach out.
That is all the time that we're going to have for today. I would like to thank our sponsor, CosmoLex, and all of you for attending our webinar today as part of the LTRC Industry Insights series. I would also like to thank Erica for presenting today. If you are curious about future webinars, please check out the ABA LTRC page or follow our Twitter at LTRC for updates. You can keep up with CosmoLex at CosmoLex Legal on Twitter or cosmolex.com. We will now conclude the webinar. Bye, everyone.
Thanks, everyone. Have a great day.